Hey everybody, how's it going? We'll get ready to start today's education webinar. Now today we're going to talk about letting winners run. How the things that you have to, that I have in place to help me, to allow my winners to run. And I know you guys are laughing your ass off saying, well, you got to have winners in order to be able to let them run. So I'll take that for now. But it's not going to be that way forever. So y'all laugh it up now. Get it all out. But I'm going to share with you my strategy, because I had that issue. I got a lot of emails, or I get a lot of emails about, wanting to know, how do you let your winners run? What do you do? And I had that problem. Every time I saw green, I would take it off. Or I was up $40 and it started to go away, then I would just take it off because I didn't want to lose the green I had. And I wasn't allowing the winners to run. And I was making all of these small wins, but one loss could wipe out 4 wins because I didn't really let them go like they should have. Yeah, I had a small winner, but it wasn't anything to make me feel good about myself, put it that way. But we'll talk about that here in a minute. But the announcement that I wanted to make, and it's a big announcement because it's not something that I've actually had to do in a very long time. But if you've taken, or if you've gone through my Trader's Mindset course, the trading psychology course that's on the website, if you've gone through that, the 4th class talks about taking the time out. And different times, you're going to want to take a time out. So there are different types. There's the time between trades where you kind of regroup. There's a downtime between the market close and the open where you kind of debrief yourself. That's when you're doing your journaling and really analyzing your day, getting mentally prepared for the next day. And then there's a downtime when you have performance challenges. And looking at what I'm doing, I don't know if I could say it's a performance challenge. I'm not in tune with the market. The strategy's working, and it's working for every stock but the one I'm picking. So, for me, that's a challenge. And a big, like we talked about this morning, one of the problems is that the stocks that are falling in the range that I can trade in, they're not giving me the moves. And when I get one to make a move, I get stabbed in the back like EXAS did today, where it did work. But by the time it worked, I was long gone because it traded ridiculous. And, but the stock turned around and did exactly what I wanted it to do. And that's happening. And what that does is that just weighs on your mind. It beats you down. And then you start thinking that the market's just out to get you, which it's not, because we're so inconsequential with the size that we trade. nobody really pays us any attention. But it starts to feel personal. And it's like everything you do, the market's going to do opposite. When that starts to creep into your mind, that's when you got to take a time out. So I'm not going to day trade anymore until after Labor Day. Now I'm going to either still look at my swing trades. I still want to catch Tiva. I think not Tiva, Tesla, because I still think there's a mega trade in there for me that will pay everything and then some for this month to where I don't have to worry about a thing. But gonna be really focusing on catching a swing trade or two. I know there's a lot of them that's giving some good opportunities for the short-term swings, like that can mature in 2 or 3 days or 4 days. But just kind of stepping back from actual trading the open and just day trading in general, because I gotta get my head screwed on them straight. I don't want to start feeling like the whole world and everything is coming down on me, and then that can set you into a downward spiral that you can't recover. So that's what I'm gonna do. I'm still gonna do my routine. Still got to build a watch list. Still got to go through the motions. But I'm not going to take a trade. I'm going to sit back and be able to watch all of the stocks on my watch list and not have to worry about jumping in one, finding the right entry, and catching the one that's going to work. I want to sit back and watch all of them so that I could take note on what's happening. And then see, why am I picking the ones that look good, that are setting up, but then they fail at the open. And, and the ones that look good, that are too expensive for me, they're really doing good. So I got to kind of sit back and watch and take that time out. But let's take a look at EXAS real quick today. Get this chart up here. Pop out. Here's these trading things. Well, I can't blame all of this on me. Well, I got to take responsibility. But, I had problems with my internet early this morning, but it came back on. Come to find out, the neighbor behind me is getting cable. And so the idiot unhooked I've got a dedicated line going for my cable. For my internet. It's a dedicated line. So I've got 2 cable lines running to my house. And this idiot unhooked one, which happened to be the one feeding my internet, and thinking that I already had this one going. And he fed that to the guy behind me. And I'm like, I didn't know. I just know my internet went out. And it stayed out. And so it took us a while to figure out what happened. But while he was messing with it, it's like I was looking at a chart that was 15 minutes behind what I was actually trying to trade. So when this thing sold out, by the time I realized what was happening, I was down over a point. And so, I could have panicked out and just taken it off. Or I had to sit back and assess the situation, and we were sitting on the 9 and the VWAP, and I was like, well, this could be some serious support. We probably won't fade this, so I'm gonna give it a shot. And I thought, we were headed back the right way, and then bam, it came down and took me out. And then it took all day to make the move, but it made the move. It did exactly what I was looking for it to do. Here was my final target right here at 63.55, but it set up and it kept working, and it ran up 2 more points. So, had I been in here and this thing, I was able to make profit and it set up again for a move off, I could have gotten in again. Because this was a really nice setup, nice secondary setup. But everything centered around this. And this is what really gave me a breakdown today. And what got me thinking that, hey, I needed a timeout. Now, when we pulled back and held this level, I just threw in 100 shares. I was on my phone, doing what I don't really like to do. I don't like really trading on my cell phone, but, I just got in here and I'm like, I'll put in and put my target up here at 63.30, which was a high here. I didn't even put it up here at 50. I put it at 35 or something like that. Yeah, 35. And, it hit it. I could have taken it off and let it run, but I was still, in my mind, I was done. We were just going to let it go and see if it hit the target. If it did, I could be even more pissed at what happened this morning. And that got me riled up again. But it's not that the stocks are doing the opposite of what I want them to do. Eventually, they're making the move. It's the way they're trading at the beginning, at the open. And stocks that should not be making these huge moves like this, that don't have a, $1 ATR, is turning around making these huge candles here, just kind of messing me up and just kind of throwing me off. So that was today. The trade today. Yeah, this one little one here, this was a good trade. Had I been locked in and engaged, I would have taken half off here and wait to see what happens with the rest. Would have been a killer trade. But if your mind is not there, then you got to take a break. Because even good trades like this, you're going to mess up. And you're not going to make money. Alright, let me pop these back in. Alright, so we want to talk about letting your winners run. When you do have winners. And when you're trading at your best, you're going to have small losers and big winners. You hear this all the time. You need to let your winners ride, or you need to let your winners run. Stick to your stops. It's just that simple. But it's very difficult to stick to it. So whether you're a new trader or not, you have probably heard that over and over and over again. But no one really tells you what they really mean by that, or better yet, show you how to do it. So when I do have winners, you do get to see how I manage it. And when I do have losers, I try to show you, you've got to stick to your stops. Sometimes you have issues like I had today, but the loss was still manageable. It wasn't out of proportion. I didn't lose half my account, and that's what keeps us in the game. So from what I've experienced and what I've gone through in my progress and my progression through the ranks, most new traders watch their P&L. They're watching it. And it's like they're watching it go up. And if they get $50, they're going to take it. Or if it runs up and they get $100, they're going to take it. Or if it's moving up, it gets to 50, then it starts to go down and they're at like $40 or $35, they take it off. And then the stock is just that little pullback and then it takes off and they could have made $300 or $400. And, if we get into a trade, if we have identified a stock that has this incredible potential and we built a trade plan, or, we're in it, we want to see it go up, we need to be able to let it go up. If we don't, and we just keep cutting stuff off, that's why you don't see me, if a stock, most of these stocks I've been in have gone up. If I calculate it, I probably made $30, $40, $50, and then it came down and turned around and stopped me out. If I start just taking it off, if I start watching my P&L and taking it off at $30 or $40, and then I have a stock that never makes it there, and it pulls back and I get stopped out for $60 or something like that, that one stop out can take away 2 or 3 winning trades, when really it should be vice versa, where one winning trade can take out 2 or 3 losing trades and still, give you a little bit of money. Then the only way to do that is to allow the trades to work. Let your winning trades continue to run and maximize, and you maximize the potential, of that trade. So, and this is really the main reason why so many traders don't become consistently profitable. They never get to the point where they're comfortable letting trades run their course. And it's very, very, very important that you allow that to happen and that you don't take it off too soon. So, how do we fix that? I've already told you. You've got to plan your trade. You have to, but there's certain key elements in that plan that need to be covered. Now, I'm not going to go over the whole planning your trade. That class is already there if you want to. If you haven't, you want to go through that whole class. But having a trade plan before you start the trade is just like having a map before you start to travel. Now we don't use maps now. Now we use GPS. We use what I think our favorite thing to use in our family is the Waze app. It tells us traffic, tells us where police are, tells us if something's on the road. But if we don't have that, we can get lost. So we've got to have something to help us get from where we are, to where we want to be. So no way will we go out on a trip and not really know how to get to where we're going. The roadmap shows you where you are and how to get there. That's basically what it's gonna, our trade plan is gonna tell us, where we are right now in the trade and what we need to do in order to get in, or what needs to happen for us to get in the trade, and where that trade is going to go, or where we're looking for it to go. Trading the market without a trading plan, even if you have experience trading in a sim account, can be a challenging experience, especially when you have money on the line, because you're going to be worrying about that money. In the simulator, you don't care. There's no emotion. Really, there's no emotion other than you hate being wrong. But you're not really attached to it, because the next day you're right back to where you started from the day before. The objectivity and the clarity that a good trading plan provides, it's going to be a real plus when you're making these quick trading decisions, and you're able to take advantage of opportunities that's going to arise. If a stock pops up, and if it pops up to your first target, you know what to do. It's not, this stock popped up, now what do I need to do? How do I need to handle this? You automatically know. Once you get in a trade, you're only looking for it to do one or two things: go to your target or stop you out. It's one of the two things. That's all you got to pay attention to. So the main advantage of having a good trade plan is going to give you the opportunity to trade objectively without trying to make any decisions while you're in the trade. You're just going to say, okay, I'm following this. This is the trade plan. This plan works out 70% of the time. So I got to trust, I got to believe in it, and I'm going to work it out. Now, as you get better and you're able to read price action, then you'll be able to know when to dump it. But it won't be because you're watching your P&L. It's going to be because you're learning how to read price action. And you know what's coming. And you guys kind of have seen that from me in the past too. I try to tell you, look, the price action is telling me this. I just need to dump it and, just take what it's giving me and then reset. That's where that comes from. But until you get to that point, you got to have a plan that you can stick to, that's going to be void of any emotions and cause you to make decisions on the fly. So the market, it doesn't play favorites, and it can be equally unforgiving to all participants. And you've seen this over the last month. It's really not forgiving me. I've only had one or two solid trades, and the rest have just been garbage trades. And it's just part of what we have to do. But if I didn't have a trade plan and I didn't have a stop in place, I could have blown up that little bit of money that I did have. So overall, a good trading plan is going to help you identify your goals for a trade, your profits, targets, your stops. You got to have it written down. If you're having issues following your trade plan, you got to have it written down. So as you're in the trade, you can constantly look at it to remind you what you need to do. It's going to help you organize your technical research, because you're going to have your profit targets, which is going to be based on technical levels. You're going to know when and how to execute the trade, because you're going to have what strategy written down that you're looking to execute. It's going to help you manage your emotions and your risk once you enter the trade. But more importantly, it gives you a guide to manage that trade while it's still active. So let's putting it into practice. You want to first establish your stop and your profit targets. You're gonna have a max loss stop. Okay, in your mind, I'm risking $50. I'm risking $100. So based on your share size, you're automatically gonna know where your stop's gonna be. So if I'm trading 100 shares and my max loss is gonna be $50, then as soon as I get in, I'm going to add 50 cents to my entry price, and that's going to be my stop, if I'm short. If I'm long, I'm going to subtract 50 cents from my entry price, and that's going to be my stop. Because those are the key things. Because there should only be two reasons you exit a trade. Either your stop loss gets hit, or your profit target has been hit. Those are the only two reasons right now you should be thinking about to exit a trade. I like to use a hard stop, but I won't put the hard stop in until the trade actually starts to work, which sometimes backfires on me like it did today. But what I want to do, I don't want to put the stop in and then we get a quick spike up and then the stock comes back down and starts working. That happens a lot. So I like to wait for that first 5-minute candle to close after I got in to put my hard stop in. Now I do have a mental stop that is related to a level of support or resistance if there's that in the way, but for the most part I'm going to rely on that hard stop because 50 cents is really not that much. But when I trade with larger size and I have a 2 or 3 point stop, and they're going to be technical levels within that 3 points, that's going to tell me whether the trade is actually going to work or not. So before entering a trade, got to have a profit target in mind. This is going to give you the confidence in the direction to hold it through the times when the stock starts to move in the opposite way. Now, I always say the simulator is there to help you gain confidence in whatever strategy you want to trade. Because all you want to focus on in the simulator is executing those strategies. Getting the right entry. Picking the right profit targets. And, sticking to your trade plan. That's what you're going to be doing. And if you can build confidence in doing that, when you start live, it's going to be second nature. It's going to be a habit. So once you gain confidence in your strategy, knowing that this stock is probably going to hit this target, then you're going to have a little bit more confidence to hold for the entire move. Now, if you don't, you're not going to have any confidence in your trading plan if you don't have a good idea where the stock should go after it sets up and it enters. If you get in the trade and you have no idea where it's going to go or where you should put your stop, you're probably going to lose on that trade. If you make money, you're lucky. So you want to have a good idea of where that stock's going to go after it sets up and you enter the trade. You got to have that target in mind. So the way I deal with it is I scale out. Even if it's 100 shares, there's gonna be a strategic level that's at least gonna be 1-to-1. If I'm risking 50 shares, it's gonna be $1 away. Because if I take half off, if it's the only way I'm gonna get $50 is it's gonna have to move a point. So in that's what we have to be aware of. If just because it's moved 50 cents, I'm not gonna take profit at 50 cents. Because that way I'll only be locking in $25, which is half of that 25 is going to be the cost of the trade. So that doesn't make sense to me. So that's why I'm looking for stocks that's going to give me larger moves so that I can scale out. And it's got to have room. We're going to talk about that in a minute. We're going to look at a chart here. So, once you locked in some profit, it's going to be easier to be patient and let the trade play itself out. Once you locked in half your profit at 1-to-1, you're going to be like, I can just sit back and let this work because I made money regardless. I'm not going to worry about it bouncing around and doing all this other stuff. I got money in the bank. And you're patient and you let the trade play itself out. Now, you don't have to do, half and half. I like to do, take half off and then scale out a quarter and then the final quarter. But this protects you from being in a trade where you're up real good on the trade, but it turns red on you and you lose money. But in this case, you can actually lock in some profit. So you're at least going to lock in how much you risk on the trade. Anything else above that is just going to, be gravy. Once I scale out, my stock goes to break even. Yep. It's at break even. And once I take a quarter off, I move my stock to my first target where I took half off. My stop's going to be there. And I'll keep trailing my stop up. Normally it's going to be the 9 moving average that I'm going to trail. But, that's what I'm going to be looking at. All right, so this is the card that I shared with everybody, the trade plan. Where you could do this, you could write, just make your own card, your own cheat sheet, whatever the case is. But before you get in a trade, before you take a trade, and I know this takes time, but as you practice it, it's going to be second nature. Because some of this you can do, prior to the market even opening if you're trading the open. So the strategy, you're going to write down the ticker. Now your entry price, you're going to write down after that happens. You don't know your entry price until you enter. And then once you get your entry price down, you put your position size in and your hard stop. Now, most of this is really going to be for you to use when you're reflecting. That's why you want to write it down. But the stocks that we trade typically should not move like EXAS moved today. That's why I trade stocks with larger floats, because I don't like stocks that move that way. So you will have time to jot down your entry price, what your position size is. Your hard stops depending on what it is, it's either going to be 50 cents or a dollar added or subtracted to your entry price. If there's a technical level, you're going to write that. But more importantly, you're going to have your profit targets down. So and one of the issues that you have with trading a smaller account, a lot of times you can't put your stop in and your profit target in at the same time because you don't have enough buying power. So that's another issue that you run into trading, relatively small. So if anything, you're going to have your hard stop in, and in order to take profit, you're going to have to kill your hard stop, take profit at your first target, and then reset. Reset your stop back to your entry price, and then you could put in your second profit target, and then the stock will be on autopilot at that time. How do you know when to trail to stop? Once the trade works, once I've scaled out twice, then I'm gonna usually follow the 9 if it's in play. Once it breaks over or above it, depending on which way I'm trading, I'm done. All right, so let's take a look at all right, let's take a look at TIVA here. And let's say we're looking for opening range breakout or breakdown. All right, so what I need to remove this. So what we need to do you're going to have a high and low, a pre-market high and low. Ideally, you want a stop that's going to give you enough time to market. But a lot of times I've already marked this before the first 5 minutes is done. So I know where the opening range low is. Oh, it's supposed to be red. I know where the opening range low is, and I'll know, like, if we got a big red candle, I'm just gonna mark the low. If I have time, then I'll come up here and mark the high. But I'm not gonna worry about the high just yet unless this bounces and starts to come back the other way. Then I'm gonna worry about the opening range high. What we like to see is, I love to see the first 3 candles or so trading within that 5-minute opening range. That gives us time to really get everything in order. So watching this and then watching this candle, we opened down here, we sold off a little bit, got bought back up. Then this candle opened, we started to sell off. There's no trade on this until we get under the 200. So my goal is, I know no entry until under the 200. And I have to write this down, because if I don't, I'm going to get in up here. As soon as we break the opening range low, I'm going to take the trade. And I'm going to say, to hell with the 200. But I got to have it written in my face to wait until we get under the 200. We establish under it, and we can get in. So I could get in as it comes up and starts to sell. or I can wait until, this breaks the low of this candle and I could get in. Now the question becomes, I know my entry is going to be under the 200. So what other levels do we have in play? That's what my next question is going to be. So if I don't have the levels marked, I'm going to have to go to the daily chart. Go to the daily chart, and I'm going to have to mark my levels around where I'm trading. Or I have to verify that these levels have been marked in the right place. And yes, they have. So all of the support and resistance for what I'm working with has already been I've already marked them out. I've already been taken care of. So now I know my entry is going to be under here. Where is a logical first target? If I get in at 2220, do I have a logical target? So the next level that I have under 2220 is 2175. So this is just under 50 cents. No way I can scale out on this. Okay, if I get in this trade, I'm gonna have to hold this for the 50-cent move. Because we're only talking about 50 cents. And we don't want to split up a 50-cent move. No way we want to do that. So we're going to wait on this until we get to our final target. Now, how do we use, if we're not scaling out, what do we use to keep us in the trade? That's where the $1 million question comes in. As it starts to work, the 9 is usually going to be following it. You're going to use the 9 as your guide. Once the trade starts working and you're waiting for it to hit your target, you want to use the 9 moving average as your guide. And if you get a candle to close above the 9 moving average, take it off. Yeah, it could be a fake because we do see a lot of fake ones. But at this point, you're not in a position to really deal with that. You want to focus, 100%, on what you're doing. So we got in this trade. We had our profit target. We knew that there will not be a first target. We're just going to have an ultimate target because this was 50 cents. And that's all it takes. For me, the 9 you could consider training wheels if you want to. All right, so let's look at the trade from Monday. All right, so here is a trade from Monday. I think this was a buyout, so we can't deal with that. Let's see if there's another. Can't deal with any buyouts here. No buyouts, man. What was the other one that day? EL? Oh, you want me to use... Yeah, let's look at DE. Alright, I'll look at that for you. Said DE from today. This wouldn't have been one I traded. It didn't have any volume. Oh yeah, DE, they released that a couple of days ago. We'll see. We'll look at ADI from the day. Yeah, I thought you meant today. That's why I was looking at it. So we'll look at ADI from today. All right, so we know we want to trade this with our opening range. We want to use the opening range high and the low. So it sets this channel. All right, so in this case, this thing really didn't break out until after 10 o'clock. So we had this sideways action, If we're using the opening range high to base our trade off of, so now we have to look at, okay, where are we going to enter on the break, which could still be ideal. We could enter on the break right here at 93.37. But now we need to figure out where our profit target's going to be. And, you know, to do that, we've got to find our daily levels, and we're looking at the moving averages and areas of potential resistance on an intraday chart. So let's go back. Let's go to the daily chart first. And, oh, I forgot to look at where we were trading. Okay, today, this morning we were trading between $92 and $93. So we were in this window right here. Let's see. So we had a daily level right here. I think this is the next one to the high side. Yep. All right, so we want to make sure that we have our daily support and resistance drawn. And so now we've got a clear picture of where we can have our profit targets. Okay, we know where our entry is going to be. Our entry is going to be over 93.29. So let's say we got in at 93.35. Which is going to be about right in here. So this is where we bought. We're going to make it green because this is where we bought. All right, so we bought here. But we know before we even get in, we need to think about where is our profit target going to be. So we know we're getting in over 93.30. Where's the next legit profit target going to be? Right here, 94.32. That's a point. That's legit. Okay, so if we get in 100 shares, we could take half off here for a point. We're risking 50 cents. Here's $1. So we made $50. Our next profit target can be right here, 94.80. That's about, what, 50 cents away. So we can take another quarter off at 50 cents. And the next level I'm looking at is this red to green. You know, this is yesterday's close price. So this will be another ideal target. So this is where we take the last quarter off. So we've got an ideal spot here at half. We got an ideal spot here at the 200. And we got our final target up here, red to green. Let's see. So once you decide your next profit target is 94.80, which is this one here. Okay, once I take profit here, automatically my stock goes back to break even. So that if it fails, I'm going to have this profit locked in and it's not going to take any more back unless we get some slippage. But I'm going to have that profit locked in, break even. When I take profit here, my stock goes back to here, my first target. So I'm not going to let this go all the way back to break even. It's going to take me out here. And so now I have allowed myself the ability to get the whole meat of this move. I mean, I scaled out, which made me feel good because I'm locking in profit. And once I get that first cover, and you'll hear me cry, bitch, moan, and complain trying to get that first cover. You know, like today on EA, I came, you know, within a few cents of getting that cover. And I was like, that's all I needed. Had I got that, automatically break even is my stop. I'm done. I could reset and, you know, bend back in for the long haul. But that's why you hear me, you know, crying, bitching, moaning, and complaining about wanting to get to the first target. I'm not even thinking about the final target. I've already got that set. I know where that is. Right now, I want to get to the first target. I want to get to the first stop. And once I hit that first stop, I'm going to breathe easy. But look, now yeah, I would have made more money if I'd have held on to it and not taken it off until we got here. But how much emotional stress and strain are you going to have sitting back, watching and waiting for this thing to get there? I know this only took, this took 20, 25, 30. It took 40 minutes to get there. This 40 minutes would have felt like 3 hours. And it would have only been 40 minutes. So scaling out makes the time go by a little bit faster. All right, you got it? That's what I'm going to be looking at. So let's look at, let's see, somebody brought up low. I didn't like low that much for opening range breakout because of how far this thing was up pre-market. I didn't really like it that much. Because see here's a, well, change the drawing back. So here is the 52 week, I mean not 52 week, the 5-minute opening range high right here. And for me, I was looking at all of this, and I'm like, for me, it was hard to see that. So we had this candle open, pull back a little bit, break the high. This was on a 52-week high breakout, if I'm not mistaken. All right, let me see if I remember correctly from this morning. Yes. We were working on that 52-week high breakout, which was up here at 108.94. That's what we're looking at as a magnet for this. So, this is what we were looking at. So this would have been the ultimate target here. This 108.94. And, we got in. We got this break. Probably would have, this was a prime example of where I probably would have taken half off. My stop would have been back here at break even. And bam, this pullback would have stopped me out. This is why I didn't get in, because this is what I felt would probably happen. Is we make a good candle up, and if it doesn't get here, we're coming back in, and it'll probably stop me out. This actually recovered pretty good and did make a break up for a new high. But just like all stocks that make a new high, and it hasn't done this within like 2 weeks, it sells off. And that's exactly what it did. Some of you have actually been taking these trades, based on this principle that we taught. How stocks make a new high and then they sell off. They can't hold it. They pull back for a couple of days, and then they go, and if it breaks after a couple of days, that's when you're going to get the powerful breakout. Professional traders know that we're looking, that novice traders look to buy breakouts. And if you get a fresh breakout like this, you're going to get a lot of selling, because you got people, professional traders, sitting here waiting for the break, and then they start selling. And the guys buying the breakout are sitting back trying to figure out what the hell happened. That is exactly what they do. Yeah, so you guys understand the thought process behind this? Why scaling out helps? Because guess what? If I took this trade and I didn't scale out, I didn't take half off, halfway up, this would have come back. I probably would have got mad and got stopped out. But at least I would have locked in some profit. This pulled back, and this actually gave you another chance to get back in. You know, it wasn't a perfect secondary setup. You know, it wasn't really a perfect flag. It wasn't anything, but it did hold the opening range high here. And by it holding, you know, entry would have been right here for me. And I could have caught this move half off on this first target. And then the rest of it would be how high can you go? All right, Ryan, you mentioning hemp. Does that mean that's what you smoke during the day to help you stay calm? I know you meant the right help, but you know, hemp might have been on your mind. Yep, that was nice. It did look, you know, it kind of looked like a flag. It wasn't perfect, but you know, this whole thing held. This was a bullish. It couldn't fall back below this opening range high. So yeah, it was screaming long all the way. But like I said, once it broke that 52-week high and it couldn't hold, it was coming back. Oh yeah, no, I was just kidding. I wasn't serious. It was a joke. I know that the L and M keys are pretty close. Yeah, just email me and I can send you the script for that study. Yeah, just shoot me an email and then I'll email you the script. All right, guys. Well, I hope this made sense. I hope this can help you, um, you know, in terms of letting your winners run. The main thing is don't look at your P&L. Turn that crap off. Don't look at it. Yeah, tomorrow is the second part for reversals. Don't be a P&L watcher. It will limit your profitability. Just focus on the chart. Watch the chart. Yeah, Kareem. Yep, that's the right one. All right. Any more questions? I can stop the video here.